And welcome. This is Mary Ellen McGonagle with the MEM Edge Show, brought to you each and every Friday afternoon. And this is where we recap the week's action in the markets, and always with an eye toward helping you formulate a plan going into next week. So let's take a look. We had a very busy week this week. Our agenda today is we are going to go ahead and take a close look at the markets. This is something we do regularly so that you can have that information regarding the backdrop of the markets, not only currently, but the expectations going forward. Also, we do have earnings season starting up for some key areas next week. I'm going to share with you some of the stocks that are better known that are due to report, and also share with you how stocks in that group have been doing. They've been doing surprisingly well, so you'll want to be on board for that. Also, the art of trading gaps up in stocks, and we did this last Friday. 75 stocks gapped up last Friday, not so many this week, but we're going to follow up. I want to share with you how they've since performed, but more importantly, what to be on the prowl for. We're going to be looking at stocks that gapped up 2-3+ weeks ago as a guide for you going forward, because these gaps up in stocks on volume and on earnings can indeed point to further upside. And then we are going to also look at small cap stocks. They have been a bit volatile after experiencing a very bullish week last week. They did pull back over 5% this week. How can we play that pullback in some of the stronger small cap stocks? So lots to cover. Let's get started. I do want to take a look at some of the important news that did take place this week. It's going to be important as a backdrop and to really give you a sense of why and how the market is behaving the way it is. So early in the week, we did have Fed Chair Powell come out. He hinted that the economic recovery was, in fact, going to be rather prolonged, and this did bring the markets down Monday and Tuesday. Certainly a real dose of cold water, if you will, following the prior week's optimistic sense that the economy was reopening. And then from there, in fact, today we did get some numbers. Retail sales and industrial production, they both fell the most on record. Retail sales began reporting in 92, but for industrial production, the 11+% drop was the highest in over a century. So that was certainly very big news. We also are seeing more in the way of U.S.-China trade tensions as they continue to escalate. Trump is on the move to block sales of U.S. semiconductor products to Huawei, which is China's largest technology company. So a lot of movement in semis as those tensions are starting to heat up. And then also unemployment numbers came out yesterday. They are continuing to climb. Now, the reason I'm pointing out this backdrop to you is the fact that by and large, the news was predominantly negative. But let's go ahead and move over and take a look at the markets. How did we, in fact, respond to the negative backdrop as far as news? And what we're looking at here is a daily price chart of the S&P 500. And I wanted to point out to you, this is that Monday and Tuesday, actually earlier in the week, pullback on Powell's news. And we can see that we've gotten a nice recovery here on this index. And I did want to add one more simple moving average, because from my work, these simple moving averages are really helpful, just really incredibly powerful guideposts, if you will, as far as indicating potential support and resistance. So I've just added that 21-day simple moving average. And what I did want to point out to you is prior to this week, we were continuing to find support at that shorter term 10-day simple moving average. However, this week's action, we are closing just below that not only 10, but also that 21-day simple moving average, just a hair below that. So not super negative, but certainly something that we want to be on the prowl for. In fact, upon closer inspection, because I do prepare for this earlier today, it does appear that the S&P 500 closed above that pink 21-day simple moving average. You can tell because over here it provides the number for that metric, 2857, and then the close is 2863, so a hair above it. We'll take it. That is constructive. The fact that we are now bullishly positioned just above that 21, and from my work, more downside. If we were to see more downside action, this 50-day is going to be your next area of support. So nice close for the week. The RSI is positive. And I know that we do have the MACD. I'm going to go ahead and modify that because I find for these indexes, the stochastics are a bit faster and they are nice in the sense that they are a bit earlier in their signals. Unfortunately, we are getting a negative stochastics this week. It closed below this net neutral 50. So a bit mixed as far as the RSI positive, stochastics negative. But I will say also, in addition to being an early signal, they are also a bit more active. So that is the S&P 500. We would be remiss for not taking a look at the leadership group and index at this point in time, and that is the Nasdaq. So we're looking at a daily price chart of the Nasdaq. Again, that pullback on Fed Chair Powell's remarks being met with support at this upward trending pink 21-day simple moving average. And for the Nasdaq, we closed the week above that 10-day simple moving average. So very, very bullish action here on the Nasdaq, despite pressure on those semiconductor stocks. And then we can also see the RSI remained positive throughout this period. I'll review where the strength has been most recently in the NASDAQ so we can get a sense of areas you will want to be focusing on in these high growth stocks. And then also the stochastics remained positive. So from my work, very good news. We are ending the week on a relatively positive note with these broader market indices. Now let's go ahead and drill down just a bit further behind the curtain, if you will. We want to see the action among those sectors in the S&P 500. So we have the 11 sectors, a 2-month daily price chart, and I've gone ahead and added that RSI, that relative strength indicator, sorted it descending. I want to be able to immediately capture where the strength is in the markets. And we can see up here in the forefront XLC. This is communication services, and it is all about the internet. And for all of us in lockdown, we now certainly understand, if we didn't prior to the lockdown, how critical internet services are. A lot of this is entertainment related, but also otherwise as far as the services that are being provided among these communication services companies. Take a look. Technology up here in the forefront. Again, all about keeping us connected, whether it's with online education, with employers, and just simply with each other. Technology is really leading the charge. Consumer discretionary. Now, this might be surprising to individuals as far as the retail sales numbers hitting record lows. Why are discretionary numbers, the sector, holding up? Well, certainly Amazon has an awful lot to do with that. But in this next area, we are going to explore one of the more vibrant areas among consumer discretionary. Moving along, healthcare, and we are also going to review where among healthcare we are seeing a lot of strength. Really super exciting. Uh, Healthcare is the only sector that is up for the week. It's up 1%. So again, we are going to drill down a bit further into those healthcare areas that are exhibiting strength. And then from there, we can drill down. Financials got shellacked. They did get hit again, down 5.6%. So despite a reopening economy, there is still that fear of loan defaults. And then, of course, the low interest rate environment is not helping them either. Utilities suffering as the lockdown keeps people away from those higher energy consuming corporate areas, and then industrials just really getting hit, and real estate. So we continue to see that have and have not. The real estate is those REITs, again, commercial as well as real estate, as well as individual uh, residential REITs. There is again a fear there as far as loans and rent not being paid on time. So that is that sector glance area. I'm going to go ahead and scoot over to another view that takes into account not just the S&P, but also the Dow, the S&P, we want to look at some other areas among technology, among healthcare. So again, sort it in descending order, and this is where we're going to drill down even further. A lot of my work, my background with William O'Neill and Company is going to be centered around growth stocks. I'm looking for those high quality growth stocks that are outperforming the broader markets, and there really are a nice 2 or 3 pockets where that is taking place. So let's go ahead and start up here in the forefront. Again, strength to weakness. We're going to take a look because biotech, they had a fantastic week, up 3% on the week. A lot of developments taking place. I did write an article for StockCharts.com on Monday that reviews that, and we are in a super bullish period for biotech stocks, and it's not just COVID-19 related. It is developments technologically that are helping other drugs to advance as well. Super exciting time to be in front of biotech stocks. Gold had a nice week. It's been waffling rather in a go nowhere environment, but this week we are poised for a nice 1-month base breakout on gold. So those of you that are gold bugs, you can see this MACD down here, black line poised to cross up above the red. RSI remained positive during this base building period. So I would urge you to take a look at some of Newmont Mining, some of the others in that gold space, because they do look poised for more upside. This third area here, I use an ETF called IGV, and this is the software ETF, and all of this move subsequent to this March 23rd low is cloud computing. This is helping again to keep people connected, primarily with corporate, with jobs, so that they can have their data collected and shared collectively. So we can see that with those Powell remarks, it did pull back, but take a look, because this pullback really presented a very ideal buying opportunity for a lot of these software stocks, which are setting up potentially for another leg up. We'll share a name or two there. And then as we continue to move on, I would be remiss by not sharing with you XRT. This is the S&P 500 retail, and we can see that it is holding up remarkably well. If you drill down and take a look at XRT and the components, I will tell you it is equal cap weighted. There's not a big heavyweight Amazon. I think Amazon is 2%. But if you look at the underlying stocks, they are by and large small and mid cap outside of that Amazon. So you're going to see Chewy, Etsy, a number of these STMP, these nice, vibrant, big movers among the retail space that's really supporting that move into XRT. And as we drill down a little bit further here, I did want to take a moment to look at the Semiconductor Index, because the US-China tensions, particularly as it relates to delivering semiconductor goods to Huawei, is really going to impact an already volatile group. You can see by and large these stocks do tend to bounce around a lot, but there are leadership names that are withstanding this volatility. One name we're going to talk about due to report next week, so we are going to go ahead and get into that as well. I'm going to take a minute here. We're going to take a very brief break. When we get back, we're going to go ahead and focus on those stocks that gapped up, and from there, the pullback in small caps. We'll be right back. During every bull market, there are a select set of stocks that far outpace their peers. They trade much higher and much faster than the rest of the markets. The reason? These select stocks have a set of characteristics that history has proven are common among big winning stocks. My easy to follow course will teach you the skills of a lifetime so you can learn how to uncover and then successfully trade these fast moving stocks. Take my 5-part course now by going to meminvestmentresearch.com for this limited time offer. And we are back. As mentioned, we're going to go ahead and follow up on some of these stocks that have experienced gaps up, and a couple of items that I do want to share with you, because oftentimes you will see stocks, not often really, but you will see them gap up. There are a couple of characteristics that I really want to tune you into that are exemplary of stocks that are poised to trade higher. We're looking at CHGG. This is Chegg. They are a software platform that allows online learning. They saw explosive growth following the closures of schools and lockdown. So let's just go ahead back and revisit this stock, because this gap up did occur about a week and a half ago, and we can see a couple of items that I do want to point out that are signals and characteristics of stocks that do quite a bit much better than the broader market. So we're looking at this gap up on CHGG. Two characteristics, three that occurred. One, the stock gapped up on huge volume, and it was in response to earnings. That earnings is going to be the engine, the power that's going to continue to drive interest and then demand in that stock as analysts are raising estimates. Growth was super explosive among new users for their platform. So this is a bit unusual, but what we can see is the stock did continue to advance. And as mentioned, the breakout of a base on the gap up with volume was one of your key signals. And from there, you can see the stock has continued to advance. Now, some of the other stocks among these on my MEM Edge report, oftentimes you'll see these big successive daily gains, and these kind of moves, you will need to drill down to a shorter term time frame. It's not often, but in this case, it will be very helpful. I'm just going to take a minute here and take us down to the intra-day chart, kind of introduce you if you're not familiar. It's not something I traffic in regularly, but this particular environment in the market is there is a need, or it really will help you if you can take a moment. We're looking at the 15-minute price chart. So here's that gap up on the open. When we have that 15-minute gap up on the open, when that next 15-minute bar surpasses the high of that first bar, oftentimes that can be an ideal entry point. The stock did in fact go on to advance higher on that May 5th day. Now, from here, the purpose of using this drill down view is to help you identify buy points. So we are looking for just slight pullbacks as the stock on the 15-minute breaks back above these simple moving averages. Your RSI and your MACD has that nice crossover positive signal that could be an entry point, another drift back, very typical, and then another potential entry point as it breaks back above the simple moving average combined with other outside signals. So I wanted to point out that as of interest on these faster moving stocks, the ability to drill down and really pinpoint, fine tune your entry point. Let's take a look at another stock that gapped up here recently. This is Nvax, Nvax. They are a vaccine maker. Very similar in the sense that it did have this nice base breakout on the gap up. Take a look at the volume, very, very high volume there, indicating interest and certainly demand for the stock. And also we can see that the RSI and MACD are quite positive. And this particular company gapped up on news that they got funding to continue to advance their vaccine, COVID-19 related. So it's not current earnings, but expected earnings. And take a look. The stock subsequent to that, over the last 4 days, subsequent to the gap up, is marking time and building another base. So we can see that it's not filling that gap in bullish fashion. I'm going to share with you an example of a stock that had very similar action about a week prior as an example of what can occur, and something of a standard, what very normally oftentimes does occur with these big gaps up. So this is Horizon Therapeutics, another healthcare biotech name, HZPN, big gap up. This was all about earnings. So we can see the stock breaks out of this base, gaps up, huge volume. It did advance a little bit more, but by and large, there was a 5-day back and fill consolidation period. And during that time, in essence, it is allowing this 10-day simple moving average to catch up to the price. Oftentimes you will see that. And then this gives you more guidance on a daily chart as far as using pullbacks to that 10-day as your potential entry point. So that's gaps up. I did want to also share with you IWM, and we did, I believe, take a look, but this is that small cap index, and this is the Russell 2000, and we did have a very significant nice move into small caps the end of April into the very beginning of May, which by and large fizzled for the most part. Powell's comments about a slow recovery is very impactful to these smaller companies, so it very rightfully pulled back, but I would argue that it held support at this 50-day simple moving average, and the last 2 days we've seen a bit of a recovery. So from here, I did want to share with you ways that you could, bearing in mind that small cap stocks are going to be inherently a bit more volatile, but there are some stocks that are leadership names among small cap where you can potentially play the pullback, for lack of a better word. So we are going to go ahead over to StockCharts.com. We're going to take a look at what is called the scooter rating for small cap stocks. So that is what we are looking at here, and that is StockCharts technical rating. This is something that you can access from that initial interface page on StockCharts. You can vary it by market cap, large cap, mid, and so forth. So in this case, of course, we are focusing on these smaller caps. The higher the number, the better. So quite simply, up here in the forefront, these are your leadership stocks. Each one, we just looked at NVAX, that vaccine, they are related. Biotech is well represented up here. ACMR is they just reported last week, a small cap semi, very, very good looking chart, if you will. But I did want to focus on today, QDEL. I'm sorry, QDEL is the company name, and this is QDEL is the ticker symbol, and the company is they did just receive this week. This gap up here is they received FDA emergency approval for their coronavirus test, and we can see that this stock pulled back similar to the Russell 2000 small cap index earlier this week, almost to that 10-day simple moving average. So had you been keeping an eye on this stock, or we'll take a look at some other examples, but you can see how you could take advantage of this pullback in these stocks that are already in confirmed uptrends. It's not going to be as interesting to me if the stock is down and out. It trades up a little, and it's just not going to be quite as healthy on those pullbacks. Let's take a look at another small cap example, and this is from that scooter rating. I'm just saving us some time as opposed to going through each one, but this is iRhythmic, IRTC, and we can see the stock really is up and out of the gate, so to speak, hitting a new high. But what I did want to point out to you relative to that is this back and fill formation. This is a consolidation period as this 10-day catches up. All of this is in line with the stock potentially setting up for another leg up. They came out with earnings here that were well above estimates. TWST is another stock, biotech name, a little bit thinner. We can see by the way the stock is trading, but they did come out with earnings on May 6th, and they are also SARS COVID related. And another really kind of attractive in the sense that the stock is finding support at this upward trending 10-day simple moving average, poised to potentially have another leg up. And I'm just going to share one other name with you here. KOPN, this is a semiconductor stock. They did come out with their earnings May 5th. Revenues were above estimates, so we can see this is that 2-day pullback on Fed Powell's comments, presenting you with an ideal buy opportunity on the pullback to this 10-day simple moving average as KOPN reverses this very long-term downtrend. Let's go ahead and move on. I talked about earnings season, and a lot of people may think it's behind us, but it is going to pick up next week. A couple of bellwether names that are due to report, and then also we begin earnings season for retail stocks because they are the latter names as far as those that report earnings. This is Nvidia. It's having quite a move certainly today. It's up almost 6% ahead. Analysts are raising estimates. They are due to report next Thursday. I'm pointing it out because this stock has now broken out of a nice long-term base. Those with the MEM Edge report will be very familiar with this winning semiconductor stock, but you will want to watch it because it may impact other semiconductor names. Let's go ahead and move on to some of these retailers that are going to report. Target is one of the stocks. They're going to report on Wednesday, and it's also setting up very bullishly. Retail, particularly among online food and needed goods, is really a vibrant area. Target among the winners, so they're all eyes on that stock next week. Let's take a look at a couple of other retail stocks that are due to report. Alibaba is China focused, but they are due to report on Friday. So a lot of focus also on how the Chinese economy, because they emerged out of coronavirus a little bit earlier, we are going to be watching how they advance as far as retail sales and beyond. I'm pointing out another small cap stock that is due to report next week. This is Haverty Furniture, HVT. And the reason I'm pointing this out is because it is in the throes of attempting to reverse this downtrend. They are due to report on Wednesday, but I want to share with you other home furnishing stocks that have already reported. This is Wayfair, big gap up, huge numbers. So people, as they are staying at home, they're making their homes more comfortable. They are nesting. There are other themes among retail as well, but I am going to share with you another stock that is due to report next week that is in that retail space. And let's see if I can pull it up because a lot of these retailers are really down and out. This is Boot Barn, BOOT. It was a big winner going into the bear market, really struggling. This is more of a not a needed good. It's more of a apparel good that is, this is an area that is by and large suffering, but it will be interesting to see if they can come in ahead of estimates. I'm going to go ahead and leave it at that. For those of you not familiar with the MEM Edge report, I go into depth much more into other sectors, as well as identify stocks poised to outpace the broader markets. So go ahead and use the tab below, click there, and you can trial my report. Hope to see you there. Have a great weekend.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.